All right, morning everyone. Welcome back to our morning cuppa at AM Joseph here. So looking at the Hang Seng Index, last Friday the index have underwent a very strong bullish momentum, and you can see that the index have bounced off the 20 days and right now heading towards a 26,000 point level. So we have kept our stop loss unchanged at 23,800 point level, and looking at the overall technical setup remains bullish so far. Now, looking at the US, this HXC index on the Friday sessions, the HXC also printed a second consecutive candlestick. I can see that the sentiment remains positive so far on the Chinese stock that list at the US market. So this will be the stocks that are under my watch list, majority unchanged. And in terms of semiconductor, right, the leader continue to be SMIC 981. And on the AI or internet giant, I think the Tencent will remains as the leader. Then on the EV or motor related, right, leader would be the Geely, right? Some of the other stocks, the blue chip stocks, especially counter such as China Mobile and also the Chinese banks, right? Then on the last week, I also mentioned to you that one counter that consistently beat the market would be the Sino Biopharma, Goyao. Then on recently, we do see, apart from the commodity stocks such as the aluminium China and also the Hua Hong, um, the consumer stocks such as the Anta Sports leaning and also Bositing and also 361 has been moving up upwards so far. Now, apart from the consumer, right, you think that the gold price is continue to move upwards, right? Then you can look at Chow Tai Fook. Okay. In terms of the defense stocks, this will be the CSSC offshore, right? And looking at the Anta Sports, this is one of the counter that we have made in our botanical report last week. I can see that the counter after a breakout, we continue to reach the R1 and heading towards the R2, 105 Hong Kong dollar. So this morning I just make another new R3, which is 110, right? So on the downside, the major support remains at 90 Hong Kong dollar unchanged. So this morning we'll be looking at bid on the tech stocks, Sense Time 20, stock code 20, and it break past the 1 Hong Kong dollar 80 cents on the back of high volume. So a breakout on Sense Time should be testing next resistance at $1 95 cents and followed by $2.10. Downside support is the recent low at 1 Hong Kong dollar 68 cents. Now, secondly, we have the Johnson Electric 179 that have break past the 26 Hong Kong dollar resistance. At this juncture, it's undergoing consolidations. In case the bullish momentum pick up again, Johnson Electric will be testing 30 and followed by 34 Hong Kong dollar. Downside support is at 22. So on the Friday, right, Powell have mentioned that at the Jackson Hole that Fed may cut the interest rates. So far, Fed is actually playing between the full employment and also to combat the inflations. But right now, the job has been softened. So they are going to infuse some liquidity in the market. And right now, consensus is that US is going to cut interest rate in coming September meeting. Right. So far, the House view think that there will be two rate cut this year unchanged, September and December. For SSSP, the Europe market continue to move upwards and heading towards 565 point level. So on the downside, support has been firm at the 525. And XPX also after the Powell statement, the US equity market underwent a very strong price actions Friday. So if the momentum follow through, right, likelihood that S&P is going to test the 6,006, which is the record high so far. So these are the US stocks in the watch list, and among the US stocks, be paying attention to some of the Chinese stock that list in the US market, particular C Limited. This is the stocks that we have shared in our last week technical report, and it is heading towards 190 and followed by the 200. So you can see that post result briefing results announcement, the C Limited have staged a very strong gap up, and based on this price volume profile, right, I can see that a very strong support is actually at 160. So as long as the C Limited maintain this gap up and also stay above the 160, right, bulls will remain in the driver's seat, and it should drive share price towards 190 and followed by 200. So coming back to Malaysian market on the weekly basis, you can see that the FPM KLCI managed to cross the 1590 level. So for the past few weeks, I can see that ever since the index climbed above this 20-week moving average, the setup tends to favor in the bull. So in terms of a medium-term trend, I think using a 20-week together with a 50-week combinations, this is a very good indicator for the FPM KLCI trend. So right now, after the bullish breakout, FPM KLCI will be testing 1645 and followed by 1685. This will be a technical level for the fundamental picks after the this August result earnings. Next week, I think Alex will give us the fundamental target on the year-end FPM KLCI. Right now, house number is 1006 by year-end. So last week, the best sector was industrial, went up by 4.8%, followed by utilities 3%, and construction almost 2%. Property and transportations led behind the years registered in negative territory. Now FKLI continue on the rally, close higher at 1604, breaking past 1006 psychological resistance. Next level will be 1620 followed by 1650. Right now we keep our stop loss unchanged at 1535. So as long as stay above 1535, the bulls will have the technical advantage. Now, secondly, FCPO, after the 3 session of corrections on Friday, it underwent a fresh positive price actions, eyeing to resume the upside movement to test 4006 followed by 4007. On the downside, we kept our stop loss unchanged at 4250. So far, the technical setup remain bullish for FCPO. So this will be the watch list that we shared with you on the last Friday. Some of the color doesn't have a meaning, but we just want you to pay attention to some of the counters like MCman, MN Holding, Penta, Gadang, GDB, Powell. Now, this morning, we have a technical report on the MI Technovations, which break past their 2 ringgit and 25 cents. So breakout, MI will be testing 2 ringgit and 35 cents and followed by 2 ringgit and 45 cents. Downside support is 2 ringgit and 15 cents. Now, MI Holdings have crossed above their 1 ringgit and 50 cents. So last week they have announcement that they are going for proposing a private placement. So after a breakout, right, MN Holdings will be testing 1 ringgit 60 cents and followed by 1 ringgit and 70 cents. Downside support is 1 ringgit and 43 cents. So we have one tech stock, which is a breakout MI Technovations, and one constructions or data center related team, MN Holdings, also bullish breakout. So I stop here and pass on to Yong on the economics weekly report. Thank you.
Thank you, Joseph. Thanks for all for joining the call. Our discussion on our weekly report last Friday. So since last Friday, we have a signal coming from Fed that during the Jackson Hole Symposium, Fed Chair Jerome Powell has suggested that the Fed likely to on track for interest rate cut in September. This is after holding the benchmark rate steady for the 8 months in this year. So he also pointed to the shift in the balance of risk, which may warrant adjusting our policy stance. So this is noted to the surprising weak figure revisions of the non-farm payroll data published after the July policy meeting. However, Powell also emphasized that ongoing risk higher inflations. This is spurred by Trump tariff, lead to set up a challenging debate between the officials when they try to figure out whether what is the decisions on cut or hold in coming September meetings. So despite that, we're still seeing and maintain our baseline expectations for further 25 basis point cuts in September and December, but recognize that the risk is currently due toward a shallower path if inflation risks are intensified, potentially to one or no cut at all for second half. Our risk sentiment index continue to point to the firm risk appetite, and this is supporting our overweight equity stance since early second quarter. And the reading also suggests that equity may remain favor, and also fixed income remain market weight and cash remain underweight. Still, despite the strong persistent risk-on sentiments, we still flag rising geopolitical tensions that Trump could impose additional 25 basis point 25 percent tariff on Indian goods on the 28th of August, and this could prompt a strong response from both nations, India and China, where China has previously announced that they firmly oppose any tariff in their tariff against India and firmly stand with India to uphold the multi-territorial trading system. So their such rhetoric could ignite the broader trade tensions, particularly with the US. So as a result, we still see some downside coming from the trade tensions, and we could see more cautions on that front. On the dollar and yields front, we have seen that DXY have fallen significantly to 97.8 level versus last week figures of 98. So this is primarily due to the Jackson Hole symposium stance from Fed, where they have a dovish stance indicating a further rate cut, and also the yield have further declined to 4.25. So this is also a shift in the expectations, where we can see that the swap pricings of the September cuts has gone back to 85.8% probability from previously 75% in previous week print. So however, despite all this, the attention continues to follow on further data release, especially the durable goods order, second quarter US GDP, and also the PC price index. Last week, we have a lot of series data release coming from ASEAN. So we have Bank Indonesia data coming that surprised the market with a 25 basis point cut to 5.25. This is defying the consensus our forecast for whole. So this suggests that the BI is suggesting a more proactive policy stance to support growth amid a softening demand. So with this, we shift our expectations to expect another 25 basis point cut in the second half, and potentially more if the downside risks continue to intensify. In Malaysia, July export have rose over 6.8% on year. This is outperforming expectations due to a sharp 42% rise in the re-exports. However, the domestic export which is excluding the re-export, has fell by 1.9%, highlighting that trade momentum in Malaysia remains fragile. So this is despite that headline data remains strong, the caution is still remain warranted because this trade is continuing to face the Trump tariff threat. For the week ahead, we have a key data release, including second quarter GDP and University of Michigan Sentiment Index on 28th of August for US. And for ASEAN, we have Singapore July inflation data at today, and 26 tomorrow we have IPI data from Singapore. So this is followed by Thailand 28th of August for the trade. And that's all from me today. And happy to pass on to the next speaker. Thanks.
Hi, morning. Let's move on to Sime Darby property post-results briefing note. So it was held on last Friday. So after the briefing, we pared down FY 25 to 27 earnings forecast by 15, 4, and 5%. We understand that about 150 to 200 million worth of industrial products have been held back since last year, which means that, if it's not because of the effort to develop own property, investment properties, the industrial property sales could have been 200 million better. As mentioned, this is to develop into own industrial investment properties, and hence all this will be rented out going forward. This is part of the effort under the company's Shift 25 transformation program, whereby management is determined to grow the property asset base so that Sime Prop will become a true real estate player. The REIT listing is still on the table. We believe that it will be well received given the high quality of Sime Prop's industrial asset portfolio. Okay, the funding plan for the second data center, which may worth about 4 to 5 billion, has not been firmed up yet, but we think management could park it under a development fund, whereby the concept could be similar to the Industrial Development Fund that was set up in 2021 to fund the logistic warehouse industrial project at Bandar Bukit Raja. This is with logos, if you recall. And meanwhile, the award of the DC construction contract could be underway, and so that Sime Prop will be able to deliver the facility by end of 2027. In the pipeline, KLGC Sim Mall with NLA 240,000 square feet is scheduled to open its door in October this year. And so far, the committed occupancy has already reached 85%. The mall is positioned as a neighborhood mall with lifestyle and wellness concept incorporated. And Sime Prop has also started developing another three logistic warehouses at Bandar Bukit Raja as Metro Hub 1 and 2 with total NLA of 2 million square feet have already reached 188% occupancy rates. Construction works for the third warehouse has already started, while progress on the other two warehouses is still at the planning stage. These three warehouses will give NLA of 2 million square feet again, and the current IDF will be sufficient to fund their development. So all in, we are maintaining our target price at 233. We remain positive on the company given management's focus on growing its investment asset portfolio on top of its solid property development earnings. And we maintain our target price 233 as well. Let me stop here and pass to the next speaker, Adam.
All right. Okay, good morning, everyone. So we have a results preview on IGM Corp today. We expect its first quarter 2026 results, which will be released this Wednesday, to record a year-on-year growth between 8 and 23%, mainly backed by higher progress from its construction projects that have reached the higher end of the S-curve. For example, on 11th of August, we did highlight that we observed the progress for certain warehouse projects that it is involved in the area of Shah Alam has seen commendable progress as of the end of June this year as compared to end of March this year, and hence we view that could lead to better earnings recognition for the first quarter of FY26, or which is between April to June this year. Aside from that, key DC projects such as the Iskandar Putri Data Center project has reached its topping out ceremony in July, which indicates a meaningful progress. And also bear in mind that IGM is not the contractor that was being given a stop work order. It was another contractor which was related to ZAC Data Center, which was slightly related to another data center. So we view that IGM continues to have the credibilities, especially after being awarded with the 1.4 billion ringgit data center job last 2 weeks. And we view that they could stand a stronger chance to win other projects, particularly in the Klang Valley, given that in our view they seem to have a lot more capacity in terms of their IBS plant. Aside from that, we are still waiting for the outcome from the civil servant housing job in Nusantara capital, Indonesia. That's about 1 billion. So no changes to our earnings estimates, maintained by with an unchanged target price of RM73. Yeah, so that's all from me. I'll pass on the floor to the next speaker. Thank you.
Okay, finally, we have a post-results call update on Kelington Group. This is basically the call that they had. Results were announced last Thursday, so they call on Friday morning. Basically, we're upbeat on the group post the Q2 numbers. Very strong double-digit FY25 to 27 earnings growth projected. This is basically driven by the expansion of the advanced engineering business into new markets, as well as the very strong tender book of 4.5 billion. Just very quickly, in terms of the tender outcomes, quite a number of new orders year to date. It's already approaching 800 million. The key LOI received recently was that 244 million that they've gotten from Germany. This is basically the first expansion into that particular market. There will be another 1.5 billion coming through in terms of tender book. Should be announced probably by late month or even end September. After securing a foothold in Europe, via Germany, they're now setting their sights onto Japan. So this is the latest market that they're getting into. Ongoing discussions, with Rapidus. Rapidus, basically the semiconductor upstart that's being funded by the government with really heavy subsidies. And there's also another player called Micron. This is a US-based semicon company that, an existing customer of theirs in Singapore. Both negotiations are ongoing for hookup works. I think, we'll probably be hearing something from both of these customers by end of this year. In any case, they're actually in quite a good position to actually secure some hookup works there. In terms of the tender book, it's about 4.5 billion now. If you actually knock off the, that close to 1 billion that they bid for the German Infineon customer. CCUS Ventures, this is basically the new carbon capture, utilization and storage initiatives. This is actually a new leg of growth for the group. I think they've mentioned this late last year. Quite a number of collaborations ongoing with Mars Steel, Petronas and all that, effectively on the transportation of carbon. And this is something that they are working on with various state authorities as well in Sarawak as well in Selangor. They did highlight that discussions are ongoing to explore the production of green hydrogen, that's green H2. This is, for the fuel that the buses in Kuching will basically take. I think there are 57 buses there on a pilot basis, and the Sarawak government is basically trialing this out as part of the urban renewal program for the transportation sector in Kuching. I think it's still very early stage in terms of the CCUS contributions. They don't expect this to be something that's material, at least over the next 1 to 2 years. The industrial gas business, for those of you who are not quite familiar, KGB, Kelington Group, also produces liquid carbon dioxide, for the use of in a F&B sector as well as construction. Though this particular segment has actually grown quite incredibly over the last couple of years, and that's really driven by the expansion of the new plant. They've got a second plant up and running since March. They've got about close to 120,000 metric tons in terms of daily capacity. It's been weaker in terms of the first half number, down 23%. That's really due to the weaker special gases sale due to the closure of one single customer's premise in Sarawak late last year. So this particular customer, it's basically closed shop, but the management did say that they are working very hard to actually address this with potential engagements with new customers. Also do note that the consumption of LCO2 in terms of the LCO2 business itself is still very steady. No reasons to be overly worried there. And average selling prices have also increased by about 10 to 50% Q on Q as we gather from management at the call last week. So profitability wise, in terms of the industrial gas business, is still very much sustained. I do think that the growth will moderate a bit on year-on-year basis, but overall still a very lucrative business to begin with. GP margins are quite rich at over 40% relative to the mainstream UHP business. which is about 15 to 20% margins. As a whole, I think in terms of the numbers, we've adjusted 25 to 27 core earnings by between -3 to about 7% increase, basically due to factoring the, after factoring the latest margin run rates. We've also padded the bit weak industrial gas business and some adjustments to progress billing. No change there in terms of our buy call. Target price is now upgraded to 555. This is still based on 26 times FY26 EPS, giving rise to a 15% upside. Do note that they're also paying fairly good dividends. This year, I think dividends will also reach a new high. In terms of yield, it's just under 3% at this point in time. Okay, I think that's all from me and from us today. I'll hear from you again tomorrow morning, Kappa. Thank you.